Thank you so much for joining me. It's so easy to get lost when we're not only living but working from home, lost in the digital age, what to do next. We're really lucky today to be joined by Daniel Peterson, an actual digital native, CEO of IBuyNew Group and IBuildNew Group. Dan, thanks so much for joining us.
Thanks, John. Good to be here.
Can you tell us a little bit about the two companies that you lead?
Yeah, sure. In terms of IBuyNew, it's a business that's been operating for about 8 or 9 years. It's an investment sales agency, focused in the sort of off-the-plan property sector. It's really only been under our ownership now for the last 6 months, so it's a relatively new acquisition to the group. We operate IBuyNew.com.au. And as I said, it's selling off-the-plan properties, including apartments, townhouses, house and land packages. We work really closely with a pretty large network of accountants, fin planners, brokers, but we've also got a pretty significant sort of web traffic and direct leads that we get off the platform. So that's sort of, it is a national business. We have our sales team spread across the country in Melbourne, Sydney, Brisbane, Gold Coast, and also in Perth. But in addition to that, as you touched on, John, we also own and operate IBuildNew.com.au. That was a business that was established about 5 or 6 years ago now, and ultimately that's a search platform for new home building. We ultimately generate phone qualified leads for volume builders and land developers. So we're a privately owned business, but we do have the RACV as our largest shareholder since the early part of last year, which certainly helps to sort of build trust with buyers, and longer term and certainly medium term opens up some opportunities from a marketing and lead gen perspective.
Daniel, looking at sales first, because I guess that's the most important metric. How are your sales? How have your sales been going over the last month?
Yeah, sure. Look, talking specifically here about IBuyNew, look, our sales have been strong, particularly the first couple of months of this year. In fact, February was a record month for us as a business, but we have seen a number of cancellations towards the end of March, and they've been specifically related to job losses. So sales have tapered off. I think March would have been a very good month if it wasn't for the COVID-19 situation that emerged from about the middle of the month. And we're sort of anticipating softer sales, particularly during the next couple of months, as there's a fair amount of market uncertainty. Having said that, we've got a really good pipeline at the moment of leads, and the team's sort of working through, probably with a bit more focus now on owner occupiers and the first home buyer market. But certainly, from an investor perspective, it's certainly a softer and more uncertain market than what we were dealing with even as little as a few weeks ago.
Talking about those leads, Dan, they're a really good, I suppose, lead indicator of success over the coming months. Where are they tracking? Yeah,
look, overall, our traffic is down quite a bit. And again, I'm talking specifically about IBuyNew. The web traffic's down about sort of 30% from normal levels in the last couple of weeks. And it really started to take effect from about the middle of March. I think sort of 15th, 16th of March, you start to see this downturn. But it's interesting, we have seen a bit of a bounce back in the last sort of 5 to 10 days. I think as sort of people have sort of started to understand and almost accept the norm or the new norm that we're in. We have started to see a bit of traffic come back. Site engagement's incredible. We look at a range of measures around site engagement. Average time on site, for example, is one of those. And in the case of both IBuyNew and IBuildNew.com.au, we've seen our average time on site pretty much double. In fact, in some cases, more than double than what we had against historical averages. Sorry, John, I'll just finish in terms of inquiry and leads, in terms of what you're asking about there. In terms of IBuyNew, it has slowed down. Since the middle of March, we're probably down about 40% versus our historical numbers in terms of leads. But we've been working pretty hard the last few weeks on some marketing initiatives that are probably starting to offset or reverse some of those trends that we've been seeing in recent weeks.
And are those leads and that lead volume different by geography?
Oh, not really. I mean, probably we're seeing very similar trends across the board, certainly across the different states of Australia. In terms of, I suppose, other geographies and sort of offshore interest in the Australian property market, we are starting to see that shift. In fact, we've seen some increased interest, particularly from Hong Kong, China, and Singapore, probably on the back of the Australian dollar depreciating against those currencies, but also Australia's always, I guess, been seen as a little bit of a safe haven from a investment or property investment perspective relative to other countries. I think we're seeing that even more so now on the back of the COVID-19 situation and the way the Australian market and people are kind of responding to it.
So if I was to try and draw some inference from the things you've told us there, am I right to say that you're seeing probably fewer buyers, 30 to 40% fewer buyers, but the ones that are there are spending a lot more time on your site, a lot more time researching, and that those people are fairly similar mix to normal across the different states of Australia, but more represented from offshore?
Yeah, definitely. I think that's a pretty good summary, John. Like, definitely, there's a bit less traffic and there's a bit less lead or inquiry from that traffic, but the mix is changing, and I think it's probably right. More international inquiry and actually more inquiry for owner occupiers, particularly in that first home buyer space, like whether it be for a house and land package or an apartment or a townhouse for that matter. That sector, we think, still remains pretty buoyant for a number of reasons. But we see, though, that sector being the first home buyer market is probably the segment that's got the highest intent at the moment.
And how does that influence your strategy moving forward?
Look, strategically, we've had to do a few things just to pivot around that. I mean, we've been working overall pretty hard to sort of grow our brand and our footprint nationally. We've got team members all the way across, pretty much across the country: Melbourne, Sydney, Brisbane, Gold Coast, Perth. We've probably historically been a little bit Vic-centric in terms of Victoria-centric in terms of our people and the stock that we've had available for buyers, but we are moving pretty quick now to close that. We're also very strong digital presence, but we're certainly trying to enhance our current website that we acquired last year, the IBuyNew.com.au, really trying to make that a much better online experience for investors and trying to improve the ranking of that site consistently to become a real asset for us. The other thing that we're working pretty hard on is just the breadth of properties that we have available to buyers. We're still a little bit light on in terms of townhouses and even house and land packages, which is a real strength of our sales team. Our people, they know off the plan property investment very well, but particularly when it comes to house and land packages, we've got a real strength on that front. So we're still working hard to close that gap that we've got at the moment. I think probably the last thing to mention is that we have some really good corporate referral partnerships, and we still think there's a lot of value in those partnerships, because while there's a bit of uncertainty in the market, you can't completely mitigate that. But I think what you can do is you can work closely with those partners and their clients, because they do have a level of existing trust in those relationships. And so we're working hard with some of those partners to help their clients and from a business perspective, get the most out of those partnerships.
Talking about partnerships, what do you think your developer partners should be doing in this current market? What strategies should they be deploying to help them maximise their sales results?
Yeah, look, I think there's a number of things they should do at the moment. Firstly, I would say they need to very carefully review their marketing spend. I think there's very limited value in things like, just as an example, outdoor advertising, or even radio for that matter. I would be looking at with a real microscope on anything that's related to sort of traditional media. If you come back to outdoor and radio, I mean, there's just far less cars on the road and less drive time listeners, than what we have seen historically. And I think that'll be the new norm, at least for the next sort of 3 to 6 months. I think they should really focus now on building their online presence. And some have done an amazing job on that over the last few years. But what's important now is to really build a pipeline of leads and buyers over the next few months. While market confidence is softer, it's a great chance to actually build your pipeline and then nurture those leads, probably over a longer buying cycle than what we've seen, in recent years. I think the other thing that's important for developers in particular is in the short term, they need to have some really good promotions that are compelling enough to get buyers to actually act and act with some intent. So if you don't already have a strong promotion in the market, now's the time to work something up and bring it to market pretty quickly. And probably the last thing I'd say, John, there is the other thing that already I've seen a few developers do, and I think it's been proven to be very effective, and I would encourage all builders to be reviewing this, is their deposit conditions. So the amount that is required to make a deposit on a property, but also the terms around those deposits. So those that are now factoring in the uncertainty around jobs and income, I think are seeing the reward from that in terms of being able to secure more buyers and get people to actually deposit and sign contracts with a bit more certainty to deal with the uncertainty that's in the market.
It's a really good segue to talking actually about those end buyers at the moment. What are you seeing the challenges for them in the market at the moment? Is it just jobs or are there greater challenges, and what do you think buyers should be doing at the moment?
Yeah, it's a great question, John. I think there's actually quite a lot of challenges. It's certainly not just job certainty. I think it starts there, but it leads to other challenges. I mean, job certainty is definitely one of the key things, and that's changing for many buyers that thought their jobs were even pretty secure only last month or the month before. It then flows into finances. Another major challenge, and while we've got relatively cheap funding around the place, I mean the reality is the application hurdles are now probably bigger than ever to get over. But there's some other really practical challenges like inspections. I mean the opportunity to now inspect display suites is different. They can certainly do that, but it's of course by appointment, and there's a little bit of nervousness around going to some of those physical display suites. There's also this challenge around just the confidence in the market outlook for buyers, and the media and some of the commentary that's around the media is certainly not helping that. It's creating lots of uncertainty on what's going to happen to the property market in the medium and longer term. So yeah, just confidence is an issue. I think one of the other challenges is just sourcing the best deals. I mean, but there are still buyers in the market, but I think they're constantly looking over their shoulder as to whether they have secured the best deal. And so that is just a challenge to ensure that you've got the best deal. And maybe the last challenge I'd touch on, John, is actually those buyers that have been in the market and have actually transacted over recent times, now looking to secure it, particularly those investors, now looking to secure a tenant. I think the tenant selection has never been more important. And given the pressure around rental rates, but now, the changing environment around landlords and tenancy rights or tenant rights, it is in the short term going to be a very, very important thing to get right for investors.
So what should investors be looking for at the moment in the market if they're wanting to move forward? Where are the opportunities and what should they be looking out for?
Oh, look, I think across the board there are some amazing opportunities right here and now. I think without sort of zoning in on one particular marketplace or one geography, I think right across the traditional markets of Melbourne, Sydney, Brisbane, the bigger metro areas, there are some great buying opportunities, particularly with developers that are maybe moving either the first part of their project or the back end of their project. There's some great deals to be had, there's no question about that. I also think in some of the regional areas, and I'm now referring more to house and land investment, for buyers that don't know a lot about regional property investment, they should talk to one of our consultants. We've got a great wealth of knowledge in that space, and they continue to be great opportunities, both from a price point perspective, but also the rental yield and the security that those type of investments offer buyers at this point in time.
Daniel, thank you so much for joining us. That was really informative, and all the best through the pandemic.
Thank you, John. Great to chat.
Great talking to you. Thank you.